Welcome to another episode of Beyond the Barrel. Today we'll provide a concise overview of the current state of the global onshore and offshore oil and gas rig market as of March the 24th, 2025. The current offshore global rig count as of March the 24th stands at an offshore rig count of 521 active rigs. This total comprises of 380 jackups and 141 floaters. Compared with the previous month's data in February the 24th, the global offshore rig count was 520, with 378 jackups and 142 floaters. This indicates a very small increase of only 2 jackups and a decrease of 1 floater in the past month, resulting in a net addition of 1 active rig. Key market factors influencing rig count come down to several factors really, and predominantly we're seeing a regional activity shift in the Middle East. We've experienced a reduction of active rigs due to suspension by major operators like Saudi Aramco. Conversely, regions such as the North Sea and North America have seen increase in rig activity, balancing the overall count. We're also still seeing an ongoing issue with long lead items in supply chain. Therefore, this is delaying activity and therefore new contracts are not being executed on the anticipated date. The third point is market discipline among drillers. Drilling companies have exercised caution in reactivating rigs, maintaining a disciplined approach to prevent the oversupply and to sustain favourable day rates. Having said that, there are some actual positive news stories out in the rig market today. We're also seeing some positivity in new contracts being awarded, especially if you're Beales. Beales have seen over 5 new contracts agreed or extended in the month of March alone, which signifies great movement forward for that business. In March, the offshore sector has witnessed a contribution of robust contracting activity, building on the momentum from the previous year. Some of these highlights are Pertamina in Indonesia, who have awarded CNPC on their CPOE 16 jackup rig, a 4-year contract, marking its first deployment in Indonesian waters. The 2013 Noble Regina Allen unit has secured a new drilling contract offshore in Suriname. On to Beales. The Beales Stavanger has extended its TotalEnergies contract in the North Sea, which will take it to 600 days. The extension is due to commence in 2025 summer. Beales 249 jackup has also extended its contract with BP Offshore Trinidad for an extra 100-day program starting the first quarter of 2026. Beales 247, the jackup rig, is due to go offshore to work in Australia for Jadestone Energy. This is a 1-well extension contract following the completion of its current program. Beales 106 jackup, this is an extension with BP Indonesia and will be an 80-day drilling campaign starting in May. WellSafe Solutions secures a North Sea decommissioning contract for Spirit Energy, valued at around $25 million, to decommission the wells using the Safe Protector jackup rig. It would also use the WellSafe Defender semi-sub unit, and this reflects ongoing appetite to decommission and P&A wells in the North Sea. Okay, so let's move on to the market as a whole and have a look at exactly which countries and regions have what activity going on. Let's start with North America. So the USA and the Gulf of Mexico currently has 33 active rigs with 26 on contract, representing 78.8% utilization. While South America has a market supply of 44 rigs and a market contracted rate of 44 rigs, showing a market utilization of 100%, which is really positive. Northwest Europe has a market supply of 55 with a contracted value of 48, 87.3% market utilization. West Africa is still showing growing opportunity and it's now back on its feet with 28 rigs out of 33 on supply, giving us a market utilization of 85, which is really positive because we know that when West Africa comes back on, it comes on and stays on. It's always the first to go off, but let's hope that this is back to stay now for a while. Then we come on to the big boy in the market, the Middle East. The number of rigs is just astronomical. We have 171 available rigs on supply in the Middle East, with 162 rigs already contracted, which is 94.7% utilization. A huge amount, and it really shows where is busy at the moment. Southeast Asia making some better improvements. 53 available rigs with 43 already contracted, down to 81.1%. This hopefully gives you a much clearer picture as to what's going on in the world, but it really does show that the Middle East has the market right in its hand, which obviously has a big play on market rates because we know that the Middle East typically pays lower than anywhere else, but you can see why. The opportunity, the continuity and the longevity outweigh all the other regions combined almost. So let's have a look at the land rig count as of this week versus the previous month. So the USA has a total rig count of 580 at the moment, which is a drop of 4 units since January, and it's the lowest reading since November. Canada's actually increased from 216 land rigs to 229. We know that Canada is a very seasonal market with the roads and the snow and all the weather conditions they have over there. So that is probably just the pickup of the new season coming in. Let's have a look at the global demand on the international side. At the moment, the global rig count internationally stands somewhere between 900 and 940 units, which is actually around a decrease of 10 to 20, as there's been quite a lot of fluctuation since December to now, which is why I'm giving you a bit of a guideline rather than exacts. We've seen a lot of fluctuation between January and March, but they've hovered between 900 and 940, which is an average drop of between 10 and 20 units across the first 3 months of the year. As you know, politics always plays a massive part in our industry, and what we are seeing is some big political movements that are going to drive the price up, in my opinion. I launched a video yesterday of me actually doing a live analysis of the trading charts, and I think that by the end of the week, we're gonna be somewhere between $74 and $77 a barrel based on the breakout pattern we're about to see today. But there's also a lot of political movements that are going to impact this positive oil price. The first one has to be the US has launched airstrikes on Yemen last week, and therefore this has put instability in the market and will naturally conclude to a higher oil price. Having done some research, market analysts are expecting a 2-week high period. So if you've got spare change and you like trading oil, now's probably a good time to go bullish. The second point is the US tariff policies. The announcement of new reciprocal and sectorial tariffs by the US administration has raised concerns about the global economic growth, influence market sentiment, and oil demand projections. OPEC Plus has reaffirmed its position on its plans to increase oil production by April 25. That comes off the back of them saying they were going to slow down. But I think we all know at the moment every hand is to the pump in the North America and the Middle East, and hopefully that doesn't topple the oil price. So overall, we're still seeing a very dynamic oil and gas market. There is a massive, massive push across the Middle East and North America on natural gas over oil. We're seeing a huge investment in natural gas, especially in the unconventional plays, over oil. That is with the desire of both Saudi wanting to be gas sufficient and not be an importer, the same in the US.